The big story that has coming in for the Indian economy, the growth of the Indian economy has been noted at 8.4% in quarter 3. This beats the estimates. Now, on this, the growth pegged for the financial year 2024 is 7.6%. This is a big, in fact, news which is coming in at this moment. Quarter 3 growth for the October-December quarter is now, in fact, at 8.4%. Let me bring in my colleague Sakshi Bajaj, who is joining us with more details on this. Sakshi, now this beats estimate, and also in an election year, this is going to be a big boost.
Absolutely, Ankit. It's better than expected GDP data for the Indian economy. Q3 GDP growth coming in at 8.4%. versus 8.1% in Q2. Interesting to note here that Q2 GDP data has been revised upwards as well as FY24 GDP growth estimates have been raised to 7.6% versus 7.3% earlier. So really upbeat GDP growth rates really coming in for the quarter, as well as revisions, remember, coming in that are upward. Now, of course, this is being said that double-digit growth is being seen in the construction sector. Good growth rates are being witnessed in the manufacturing sector. However, what are economists really attributing this to? Because remember, NDTV was speaking to analysts through the day, and the expectations were in the 6.4% to 7% range as far as the growth rates were concerned. So this really beating all expectations. Economists believe that, look, consumer sentiment has really outperformed, and that really is one of the key factors for this data exceeding expectations. Going forward, economists believe that private capital expenditure is likely to pick up, interest rate cuts are likely to happen, and all of those factors will continue to contribute to a resilient and a robust economy going forward. Now, to decode this further, we have Mitali Nikor joining us, a senior economist. Of course, economists have also told us that farm sector growth disappoints at the moment. So she will, of course, decode all of these factors for us. So what would you attribute this really uptick to, and this surprise GDP data in a sense for a lot of viewers?
Thanks a lot, Sakshi, for having me. And I think I've just been sitting and looking at this data for the last like half an hour or so, and I just want to say that it's a very, very interesting sort of trend that's coming out. And I want to show the difference between the quarterly numbers and the annual numbers. So as we were discussing, in the quarterly growth, we are seeing a clear story of consumer sentiment revival. In the quarterly growth, we are seeing that the consumer growth has actually outperformed a lot of the other sectors. And this has been one of the major growth drivers for, this rebound and this slightly higher estimate than was expected. However, in the annual trends, it's gross capital formation, which is essentially investment. That has been the main hero of the story, because gross capital formation has increased by about 10%. Year on year between the Q3 of 2023-24 and Q3 of 22-23. And in fact, private capital formation and, private final consumption has also increased by about 3 to 4%. So it's very interesting to see the manufacturing sector finally sort of being the main hero of this story, and manufacturing growing at 8.8% year on year. It's a very, very positive sentiment, and it also shows you that a lot of the schemes of the government, like the the PLI scheme, the production linked incentive scheme, the schemes for bringing in FDI, these seem to be bearing fruit for the government and for the economy.
Right. Now, Mitali, we have seen private capital expenditure really in the infrastructure space. Many saying that, look, if we need this trajectory to continue, we need this growth momentum to continue. Where exactly do you feel the expenditure needs to be focused on? Which sectors should we look forward at going forward?
No, I think definitely, Sakshi, as we move forward, there is a real need to invest in the infrastructure sectors to continue the investment. See, already we saw in the budget the announcements of, the capital expenditures increasing by about 11%, forming about 3.4% of GDP. So, it's clear that it's the single largest expenditure that the government is making. And there is also a huge, sort of chatter around the increase in capital expenditures across ministries. So it's not that only one or two ministries are making that capital expenditure, but across ministries, infrastructure ministries, as well as otherwise. are being, encouraged to move from revenue to capital expenditure. So that is the first, good sign that's coming in. But going forward, we need to look at logistics. PM Gati Shakti, it's a very, very important scheme. So continued investments there, continued investments in renewable energy, continued investments in circular economic development and climate resilient infrastructure. This has to be the focus continuing in the next 5 years.
All right. Thank you so much for joining us and for sharing your thoughts. That's as far as Q3 GDP data is concerned. We will keep tracking how the economy is performing.